introduce myself. My name is Jasel Chauhan. I'm head of international finance at Dickinson, and also head of the Greek office. And I've been working with Nicholas for, as I said, almost 15 years now, predominantly in Athens. But it's even more of a privilege to be here on the inaugural Dubai Maritime event for Capital Link. So it's a pleasure to be here. And as you all would see, they're great events around the world, and certainly today's event's no exception to that. So it's a huge pleasure to have a fantastic panel again, the first panel of the day. So to start with that, what I'll do is just briefly introduce our panelists for the day. To my left, Gernot Ruppelt, CEO of Ardmore Shipping. Next to Gernot, we have Pankaj Khanna, CEO of Heidmar Maritime. Next to Pankaj, we have Sadan Kaptanoglu, CEO of Kaptanoglu Shipping and a former president of BIMCO. And last but not least, we have Tim Coffin, who's CEO of Tristar Eships. So our panel for this morning is entitled Shipping and Global Supply Chain from Uncertainty to Opportunity, which is a very broad title indeed, which probably means we're going to be able to speak about everything, but without a great deal of detail on each. But thankfully, we've got some further panels this afternoon and this morning to kind of elaborate on some of those. So just to jump straight into the questions. So over the course of this year, I think there's been plenty of challenges. I think everyone in this room would probably agree. And just to list a few, there's geopolitics and sanctions, trade wars and real wars, AI and technology developments, cyber risks and safety at sea, environmental regulation and decarbonization, counterparty risk and performance, order book and fleet modernization, alternative fuel choices, the list goes on. So I think I'll need to stop there before we run out of time. But on that note, I'll ask each of the panelists to give a brief introduction about themselves, their companies and the organizations they represent, but also to kind of give their views on the year so far of the key challenges. I think probably focusing on the key challenges to start, but also touching on the opportunities that they and their companies have faced during 2025. Gernot, would you like to start with that?
Sure, thank you. For a brief introduction, my name is Gernot Ruppelt, CEO with Ardmore Shipping. We are a product and chemical tanker owner, fully integrated shipping company listed on the New York Stock Exchange. To answer your question, I might say something a bit general at the start, and then I'll give you an example of how we've navigated this year. If you look at the theme of this panel, uncertainty and opportunity, I always feel like uncertainty might have been the most overused word of this year. But, you know, well, uncertainty, I guess, implies that you don't know something that comes with risk. So uncertainty is really about risk. And then opportunity, I guess, implies that there's going to be some sort of reward. So you get to risk and reward. And, of course, this room knows better than anybody else that, you know, risk and reward are just, you know, two sides of the same coin, and one enables the other, especially in the sort of cyclical and volatile industry that we're in. And then you just, you know, at sort of very common sense business decisions, you know, what is your reward? What are your expected cash flows? How likely are they? What's your risk? And over what duration of time do you assess that? And these are, you know, macro decisions, micro decisions that a business faces every day. You can be very methodical about how you bring that, of course, into your boardroom conversations, into your management conversations. But of course, at any tactical level of a shipping company, that decision on risk and reward happens several times a day. So maybe that just takes I think the gravitas out of the conversation a little bit. How have we approached it as Ardmore? We felt that there was a time of great uncertainty in the second quarter of this year. And during this time of great uncertainty, we saw a great opportunity. That was sort of post-Liberation Day, you know, during heightened, you know, fear and uncertainty about what that means for the global economy, for global trade. During that time, we actually bought 3 ships, invested about $100 million, or just north of that, in 3 very modern, fuel-efficient MR tankers. The market has moved up considerably since. You know, these ships are probably worth now closer to $120 million. So, of course, in one way, that always looks great in hindsight. But at that time, that decision wasn't as easy. In the second quarter, we were also facing the same question around risk. And of course, it's always messy because a lot is going on in the world. But during that time of uncertainty, I think you got to match that uncertainty with pragmatism. What are the things that you do know? What are the things you do know about the fundamentals that we thought were very robust about our industry, about our market? We felt also looking at the numbers that markets were oversold. So anchoring yourself in the things you do know and then asking yourself, how can we generate value today despite this uncertainty? And for us, one of the ways to manage that risk was, we were buying some ships and leaning in on the acquisition front. We were taking some risk off the table in other parts of the company, locking in some really attractive multi-year contracts with top-tier counterparties. So in a way, looking at not just every transaction on a very isolated way, we look at the entire portfolio of Ardmore, expanding earnings power on one side of the business and then kind of locking in earnings quality on another to help manage that risk.
Thanks very much for that, Gernot. Just, I suppose, carrying on the theme of, you mentioned risk and reward as the kind of parallel to uncertainty and opportunity. I guess I'll pass that topic onto Pankaj. If you'd like to take it.
So, Heidmar, we basically are a service organization. The company's been around for 40 years. So it's not a new company. And cyclicality has always been part of our industry. So uncertainty is not new. We just have, along the way in the cycle, a lot of noise that has been added by various issues that have come up this year. So I think the most important thing in our industry is resilience. You have to build an organization that is resilient and can be adapted to the change that is coming. So just that in the last year, the pace of change has been quicker than what we are used to, where in the past we have had years to adapt to it. Now we have days and months to adapt to it. A good example of this was the introduction of the Chinese port fees over a weekend. It was done on a Friday and was to be implemented on Tuesday. We were getting calls on the Monday about whether we were a US organization or not. And we had to go back and tell all our clients that 90% of the shares of Heidmar are owned by Greek residents, so we are not US. These are not the kind of things that we have done in the past, but it's part of our life. So in terms of how you build the organization that is resilient, is adaptable to change, is the key thing going forward. We have in this year listed the company on NASDAQ. We were a pooling company. No service company as such is currently listed. It was a decision which was taken in light of the fact that pooling is changing. The industry is changing. The needs of the industry are changing. So to stay as a company that only did tanker pooling was not a viable business plan for the future. So we still do pooling. We do commercial management. We are doing technical management today. So it's a full service organization that has changed its business strategy in line with the needs of the industry. So I think the key thing over here has been that we saw this coming over the last couple of years. Pools basically are cyclical as well. In a low cycle, we get more ships because people want cash flow and they want the averaging effect, they want utilization. And in the high cycle, people go for time charters or they sell their ships. So when the Ukraine war happened in 22 and the rates went up to the level they were, the TC market was very, very liquid, and there were a lot of time charters available, which has been a very unique time in the industry in the last 20, 25 years that I've been around. So we changed the strategy of the company to cater for what the industry is looking for. So today, if an investor wants to invest in a tanker, a bulk carrier, or a container, we can offer the full service in terms of setting up the corporate side of things, doing full technical management, commercial management. So whether you are a ship owner or an investor, you can invest in a sector that you're not currently invested in. So if you are an MR owner and you want to buy a VLCC, it would be very difficult to do if you had to go out and do it yourself. Whereas I can offer you a full service package where we have a technical manager that is currently managing 4 VLCCs. We had a pool of VLCCs where we were managing 14, 15 vessels. So we have full technical commercial knowledge on how to do that. So I think that's the key thing in the business is that, at least as a service organization, you have to gear your organization to changes that are happening.
Okay, so the interesting thing that I picked up from that, Pankaj, is I think that really something that you said at the beginning, which was I think the key certainty is that there's going to be uncertainty. So I think probably with that theme, I'll pass the questions on to Sadan and Tim.
Good morning, everyone. Such a great way of starting uncertainty. Wonderful. Before that, let me introduce myself. I am a ship owner. I am a shipyard owner. Our company is private. And the way we respond usually as Kaptanoglu Shipping, because my family's roots go back to 100 years plus in shipping. And so how we respond is to usually diversify things. So that's why we not only have vessels, but we also have 3 shipyards. We do maintenance, repair, but also we do defense. And nowadays, although I am always on the side of the peace, but the recent uncertainties helping my business on the defense side, that we are not only building for NATO, we are also building for Malaysia right now. So diversification is always nice, but at the same time, as a family, we always invested in the NGOs and politics for over decades to support shipping nationally or internationally. That's then somehow that gene comes in my blood as well. So I end up in BIMCO. BIMCO is the biggest single direct entity ship owning association. We represent the 60+% of the whole shipping fleet, world shipping fleet. And I happen to be the first woman president of BIMCO, and I'm very much honored by that. As I said, in the company, how we deal with the uncertainty is being diversified. And also, I just agreed with all my colleagues here that you should have a, really good organization. You have to be fast, you have to be adapted. But, I think adaptation should be the general surname for all the shipping people. We always adapt. We always comply. And, but when I look at the industry in general, the biggest uncertainty we see, there is too many things is happening negatively. And at the same time, we have to invest to decarbonization. Yes, now we have a 1-year pause now, in a way. But still, decarbonization will happen. So that's why it gives us always a big question mark, how to invest, what to invest. So we usually look the short term, like maximum 5 years, projects. But other than that, also I see it in the shipyard as well, that you have to do so much in order to actually achieve the efficiency standards. But what I can say here, and on behalf of industry now as BIMCO, we are also looking at, and we have to focus on what we can do right now regarding decarbonization, and that is the efficiency measures, the use of digitalization, AI, everything is, being actually mentioned this morning by Ian, the cooperation, we need each other more than ever now. And I think, the politics will come and go. We've seen a lot of wars, a lot of, politicization of the shipping. I think it is completely wrong. It should not be done, but we have to defend shipping, and shipping is still alive and kicking, still, carrying the 80% of the whole volume, cargo volume in the world. We still distribute wealth, and we will continue to do so. Thank you.
Right. Good morning, ladies and gentlemen. We have a slightly different take on this, which is that people will continue to need to eat, and economies will continue to need energy. And so whatever happens politically and geopolitically and internationally, whether there are wars or not, commodities will move. And our job as an industry is apolitically to move them. That's our social purpose. And within that context, what is the most efficient way to do that? Well, in our view at Tristar, we have most of our fleet is on long-term TC. I mean, if spot rates went to zero tomorrow, we'd still be generating a 20% plus yield. So why do we do it that way? We do it that way for two reasons. Firstly, the up and down of the daily market is of no interest to us whatsoever. I mean, sometimes it's interesting to capture the gas market when the pipeline gets blown up or whatever. But that's a flip of a coin, and we hope it works out, and that's great. The rest of the time, our job is to move cargo and not take risk, and to move it reliably and efficiently. And so that's what we do. We try not to get involved in the daily sort of up and down of the market. And so far, we've been reasonably successful in doing that. I think ultimately, so where do you make, within that business model, where do you make money? And the obvious answer to that is that when you buy a ship, what you're really buying is an option on future volatility that you can strike at a time of your choosing. And so often in this industry, we see people who become victims of volatility and market spikes and market troughs, rather than people who take advantage of them. And the key is obviously to turn the script around so that when the market does spike to unreasonable levels, you can exit and hopefully store some, hopefully not reinvest immediately, so that you have some dry powder later on. That's our model, and I think it's a model that has been proven for many years, particularly by the sort of the old school Greeks. I mean, these guys were masters at this, and all I'm trying to do is copy them.
Great, thanks, Tim. Now, I think we've probably covered the difficult part of the panel discussion. We did probably take half the allocated time for the difficult part. But the interesting thing is we actually have started now to, I think each of the panelists touching on the element of the opportunity or the reward that actually is coming from those challenges and uncertainty. And just to kind of pinpoint a few from each of the panelists, we had kind of reference to investing capital, diversifying both in sectors, increasing collaboration, adapting, and also focusing on long-term plans. And these all being kind of elements that how that uncertainty has been managed. So I suppose it's on that kind of slightly turning to something more positive that, and I'll throw this question open to each of the panelists, but how has that uncertainty then helped both yourselves as an organization, but also, what is that kind of pointer to the market in terms of how to kind of navigate that difficulty, that uncertainty? And I think, as I said, the panelists have hinted towards certain areas where that's been a possibility. Would anyone like to take that question first? Gernot? Yeah.
Yeah, so I think there is definitely a positive framing for a time of risk, for a time of uncertainty, and of course for a time of volatility. And we can point to the many events, as we have at the start, that have driven this volatility. And then you should ask yourself as a business, as a company, and strategically, during times of extreme volatility, what has the most value to your trading counterparties, and what has the most value to you? So during times of volatility, during times of uncertainty, what we can offer to our trading counterparties, whether it's on buying and selling ships, charters, capital, you name it, we can offer certainty of execution. And at a time of great volatility, where ships are committed on subjects basically as free options, where there's a lot of moving targets in almost any deal negotiation, we can point to a track record now of 15 years where Ardmore has always pulled through on their commitments, whether it is on commitments we take towards our staff, towards tonnage providers, towards counterparties in the S&P market, and certainly also on the capital side of things. So again, at a time when the industry is looking for a way to achieve their business goals, we can de-risk this for the industry or for our counterparties, and equally when they then assess what is the risk-reward equation in doing business with Ardmore, that should also filter through in the numbers, and I think we have shown that this year. So that's what has value to our counterparties in times of volatility. What is value for us is optionality. During times of volatility, the value of an option goes up. And for us, it's important to understand how we can increase optionality as a business. And that goes, of course, again, sources of deal flow, could be commercial optionality, could be optionality around, your sources of lending, could be optionality in terms of building the organization that can respond in a very responsive manner to those market shifts. For us, it's also about how we upgrade our ships to make them not just more fuel efficient, but we have found ways to upgrade our ships as they go through the regular dry docking cycle to increase the cargo slate quite meaningfully. And that gives us real opportunity in the here and now to improve voyage earnings, but also in the long term, it gives us interesting strategic optionality as a business. So volatility, we offer safety of execution, and we increase optionality for our own business.
So, I mean, Heidmar has been around for 40 years, and we've been around 40 years doing spot market trading for tankers. That's what customers came to us for. And volatility is something that we live and breathe, and it's through that, of course, we have our charterers who expect execution from our customers that we facilitate. But volatility offers us opportunity, and we are very much used to dealing with this on a day-to-day basis. So in the long term, as a ship owner, you're looking at investments, but in the short term, we see volatility as an opportunity to position ships in the right place to take advantage of it at the right time. So even this year, what we have seen, for example, in the summer, rates came down, and with that, asset values had come down as well. I've been telling my clients since the beginning of this year that we see increased oil production only from long-haul VLCC, Suezmax-oriented production areas from Brazil, Guyana, US Gulf, and the Middle East. So to position themselves in VLCCs. And in the meanwhile, for our day-to-day trading, we position our fleets in the right place to take advantage of that. We didn't do time charters. We waited for the Q4 to come through. And rightly enough, VLCCs inflected to $100,000 per day. Suezmaxes went up to $60,000, $70,000 per day. So the clients who stayed with us are now enjoying those kind of rates. The clients who did not and did time charters in Q3 and panicked are now seeing rates which are substantially lower. So point is that the volatility in the tanker industry is part of our DNA. It's what we do. And it's an opportunity, but it requires a very strong stomach to be able to take that, to wait for the opportunity to come.
Yeah, just as we pass the question down to Sadan, I just wanted to ask as well, I mean, the different challenges are there, and do you see that actually making both ship owners, managers, the market, I suppose from a BIMCO industry perspective, making the market actually more resilient and adapting, and that being a positive from the market as well? Is that what you see?
When there is a challenge, there is always an opportunity in it. And this opportunity can be in a way that you make a lot of money. Sometimes you play the secure, and then you just go with the time charter, and then you say that's life. And we see in BIMCO, we have a variation of, ship owners doing different type of this. But these are the times that you actually look to your organization and you invest to your organization most. And like organizations like BIMCO become really important because, we all know that whatever you do, order TC or, sport, you're right now, the strongest arm you have is your division that they check everything, and because today you are not sanctioned, tomorrow only God knows, because things are changing so fast, rapidly, and every day you wake up, you see something new. And, in our business, yes, our word is our bond, but our business mean contracts. So you have to be very strong on the contract sides. So that's also, BIMCO comes in because we are the ones who produce all these clauses, and now we have something called ambulance clauses, which is very fun to say, so I've been saying to everywhere. And that's mean that if something happens, we have to respond immediately. It's not like the good old days that you just make one clause and then you just wait 4 years minimum to see if there is a revision need or not. So that is one thing. And the another thing, when you look at the classical ship owners, for example, like us, it depends on your fleet, because you don't need to be on the side of one thing 100%. So you don't need to be on spot all the time. You can have a couple of vessels on TC, so that, because you always, as someone who is now, more than the 5th generation, I can say that in shipping you need anchors. And the anchors usually either, TC, either a contract, or either another line of business. That's why I said earlier diversification as well. But then you should have a couple of vessels that then you can actually be on spot. So you cannot have it both, but at least you can have a better average. Thank you.
Thanks. And Tim, in terms of the opportunities that you see for yourself and also the market?
Yeah, well, I think we, as I said earlier, we don't really play the market, but what we do try to do is identify very long-term trends and plug into those relatively early on. First mover advantage is rarely an advantage in our industry. I think that's been proven again and again and again. But having said that, there are technologies that we can import from other sectors and other industries that do seem to function properly. And for example, we've just taken delivery of a battery-powered, we have a bunkering business here in the UAE, and we've just taken delivery of a battery-powered bunker barge. And will it work? Hope so. But in the greater scheme of things, we wouldn't take a risk like that on a VLCC, right? We can manage to take a risk like that and have it not work to 100% on a bunker barge. But this ship it's being delivered into a contract that's already 15 years old with an oil major. It's going to be on charter to this oil major for another 15 years. We're obviously taking the operational risk. But the point is that there are long-term trends, and we want to be on the right side of history here. We have, again, our social purpose is to move cargo and do it as efficiently as possible. And we're really good at, as an industry, when you think about the fact that we can move 2 million barrels of oil from the Middle East to the US Gulf or to the Far East for less than 1% of the value of the cargo, that's a miracle of efficiency. And we should be very, very proud of that, because it's quite an extraordinary thing. But our job is not to sit down and hope it all works out. Our job is to continue pushing forward and innovating and making sure that we can continue to deliver those extraordinary efficiencies to society. And so I think, innovation is part of that, and we have to take risks, those sorts of risks.
Right. Thanks, Tim. And sorry. So there's a couple of themes, again, actually coming from Sadan and Tim as well, which is quite helpfully moves to another topic that I think does actually reference the topics, but is a good example of challenges and opportunities, and that's the topic of decarbonisation and all the challenges that have been there, whether that's been challenges like COVID, whether that's been government policies conflicting with regulatory authorities and views of targets being too challenging, and an element of inconsistency, but difficulty for, I think, general market players to kind of face those challenges. But despite all of that, each of the panelists have sought to address, whether that's through addressing efficiencies, trying new things like battery power, and diversification. So I suppose with specific focus on that topic of the challenge, but also the opportunity and that resilience of how that's been developing, and potentially some of the opportunities that have helped drive that forward, specifically in relation to the decarbonisation targets that are out there, and how that has impacted the market. Gernot, would you like to?
Yeah, I mean, for us, trying to be as energy efficient as possible has always been part of our identity, and I think, just good business defies waste, both for economic reasons and, of course, also to have a good impact on society and the environment. But, of course, any effort in decarbonization also somehow needs to marry up with being good allocators of capital and responsible allocators of capital. So some of the decarbonization options you could take, of course, have an opportunity cost in that regard. What do I mean by that? So With regard to the current fleet, we are as fuel efficient as we can be as a company before investing in sort of, untested alternative fuels. We have sold our last non-eco ship last year, a few others in the year before. And right now we have, a highly fuel-efficient fleet that operates to an eco standard that we continue to upgrade and also integrate, machine learning and AI in terms of how we prosecute our voyages. If you take the MR, however, if you wanted to now say, okay, the cost of going dual fuel on an MR would be 6-7 million, roughly. And of course, there's an opportunity cost in that with those 6-7 million that I would spend on one ship. I can do a whole lot of energy efficiency measures on my entire fleet, and that yields real fuel savings today, reduces your carbon footprint today, gives you an economic return that's guaranteed regardless of what happens in the market, versus putting those 6-7 million into a dual fuel capacity that is at this point, of course, an aspiration, but it's untested. And I think kind of zooming way out, I think until we get to a point where either on the revenue side of the business or the capital side of the business, or ideally both, there's a real economic incentive or disincentive that is credible, sustained, and real. I think it'll be very hard for the industry to meet targets in 2030 or 2050 if we remain on this current trajectory. And I think the aspiration is there and the ambition is positive. But I think we need to always start any reflection of the status quo grounded in humility and honesty in terms of where we are today. And there is actually no clear pathway without a regulation and an economic incentive that supports that.
I think as an industry, we beat ourselves too much on this topic. If you compare a 2007 built VLCC as compared to one that's coming in 2027, the reduction in fuel consumption is 35%. So we have been decarbonizing and being more efficient across the board on all ships. So it's not something that has not been occurring. The yards have been quite proactive with that, and the owners as well. If you look at the order book, there are a lot of dual fuel vessels that have been ordered. So the owners have been taking the risk despite whether there is regulation or not. And that's with a lot of uncertainty. The availability of methanol, I don't think, is there. The availability of biofuels is primarily for aviation. It's not going to come to maritime that much. So effectively, the only fuel that has some viability for the near future is LNG. So even in that circumstance, owners have been investing in new buildings with dual fuel capabilities. So I think we are already ahead of the game as far as decarbonization is concerned. So I think that this is something that we talk a lot about. There's a lot of media focus on this, but in reality, the industry is already doing a lot about it because it makes economic sense. It's a commercial decision to do that.
Yes and no at the same time. Why? First of all, we have a very ambitious target, and it is time for us to make a pragmatic and realistic solutions to reach out these ambitious targets. I can happily say that decarbonization is accepted by every single shipping nation and all the members, so it is there. Because one of my other heads is I am the head of the TURMEPA, Turkish Maritime Environment Association, which also in Greece, we have the older sister, HELMEPA. And so we actually, I believe in the climate change and everybody has to do their part. Having said that, there has been a recent report from the World Bank Group. And if we focus on the efficiency measure that we know very well, by the way, that we can actually cut our emissions 40% by 2030. So since now we have a pause, in a way, in IMO, we all have to focus on this. But this is not good enough. That's why I said yes and no. We need single regulation for everyone. This is very important. If we go regional regulation for emissions, this will be a big problem for shipping. And the other thing that we need to actually achieve, if we can, the first goers, this, as you say, this, bold people who actually invested these should not be penalized. We have to be sure that there's a fair treatment for all of us. And it is not going to be easy, but we have to keep our eye on the price, and we have to do more efficiency as we can, as all ship owners together. Thank you.
Sorry, and Tim, as we pass it to you as well, that you mentioned the battery power, so there's some innovation there. So what are your views on that, making that decision to give that a try?
Well, don't risk too much capital. Look, Gernot said it right. We have to be responsible allocators of capital, and while we're building, battery-powered bunker barges, we're also building completely conventionally fueled MRs. And that might sound hypocritical, but it's not. The reality is we're not going to wean ourselves off of fossil fuels in 20 years. I mean, let's be real, right? This is going to take generations. And I have no hesitancy whatsoever in knowing that these ships the conventional ships that we're building are going to end their working life burning diesel fuel. It might be biodiesel, but it'll be diesel. So there's a mix. And as for methanol, LNG, and all these other things, sure, there's nothing wrong with making the investments, trying to figure out if it's going to work. Some of it will, some of it won't. My own view is that the capital required to build the delivery infrastructure necessary to provide all these different types of fuels in every port in the world is simply unviable. And so I don't think we're going to see, 5 different fuel types in all over the place. We'll see limited options in various large hubs around the world. But ultimately, diesel is so efficient that it's not replaceable in the near term. We don't. Obviously, we're all trying to add on to the existing hull forms to figure out if we can do duct fins or all this sort of stuff. 5% here, 6% there, that doesn't move the dial. The only thing that moves the dial is electricity, which brings your emissions from 100 to 0. And that's our target, right? And so the question is, how do we get there? And that is not a short-term thing. But we have to try, and we have to continue trying, and this is going to take a long time, right? We'll get there. As I said earlier, we're really good as an industry. We're really good at innovating, and we're really good at supplying goods to people all over the world super efficiently, and we will continue to do so. We'll find a way.
Great, thank you, Tim. And I did have a health warning at the beginning of our panel that I think we would barely scratch the surface, but as we're very much drawing a close to our allotted time, I think I'll just try to sum up a few of the key things that we can take away from the panel discussion. That I think clearly, again, one of the things I think that Pankaj had touched on is that the only thing that's certain is that there's going to be lots of uncertainty out there. And as I said, we've probably just very much scratched the surface of that, so there'll be a few more panels to kind of delve into those topics a little bit more. But notwithstanding that, the market is still driving forward. There's some ambitious goals there, but the market has become more resilient to focus on that and look at the reward that can come from those different initiatives that are out there. So just on that note, it just leaves me time to thank you for each of our panelists today for touching on each of those discussions, and thank you to everyone for listening, and I'll hand back to Nicholas.